All right, guys, what's up? Ramsay Rippers here from Kane Capital. I'm going to go over a quick trade recap that I took yesterday. So the trade was the SPY 380 puts. They closed yesterday at about 150%. I closed out the trade this morning, swung a quarter of the position for a gain at peak trim 210%. The trade ran 255 as we filled the gap, and that was basically the idea behind the trade. So I'm going to go ahead and pull up the chart right here. We got SPY, the 5-minute chart. I'm going to turn extended hours off real quick and just show you the basis of the trade. So first and foremost, what we were playing here was this gap area. Obviously, it's a day later. We did fill the gap. We entered the gap, but the idea behind the trade was this gap fill area from 381.37 down to 378.48, which I highlighted right here. Obviously, once again, it did come to fruition. We did fill the gap. We found some support off that 378.40 gap fill area. But back yesterday, this gap was unfilled. This price action was not there. So I'm going to go ahead and jump right back into the 5-minute from yesterday's price action, turn my EMAs on. So the strategy that I used here is more of a momentum-based strategy. I wouldn't have taken this trade if we weren't having such a strong trend day to the downside. Obviously, right away, we rejected this 393 level on SPY and just immediately sold off the entire day, not breaking the 8 exponential moving average, the 8 EMA, until 1250, and that's where I actually took this trade. So if we zoom in and take a look here, before we get into it, the white line is the 8 EMA, the blue is the 21, the purple is the 50. This strategy, once again, is a momentum-based strategy, utilizing the 8 and the 21 EMA to guide my trade on strong trend days like we had yesterday. So we found our first bit of support other than where we flagged in this 388, 389 area. Once we broke through that level and saw some hard selling to the downside, we found support at our 383.12, our 78.6 fib retracement. And basically what I was looking for is I was anticipating a bounce there. Just like we have dead cat bounces through all strong trend days to the downside, was anticipating that bounce and looking for a 21 EMA test to enter puts. And, that's exactly what we got, right? We found some, I wouldn't say it was right to the penny. We came down to 383.30, 18 cents off. It's basically the level. We found that bounce. We broke the 8 EMA to the upside, and immediately my eyes was on this blue line, this 21 EMA, for a potential rejection. Now, when we have such strong trend days like this, obviously there's always going to be bounces. It's not just going to be complete selling to the downside unless it is the panic phase. So once we tested this 21 EMA right here at around 1250, that's where I took the ad of the 380 puts at 80 cents. The reason I took the 380s was I was anticipating this to be a rather longer trade. I wanted to swing some of this position if it played out in my favor to the downside. I wanted to swing some of this position into the next day, looking for that gap fill, right? And as you can see, we rejected the 21 EMA really hard. And right off of that rejection at around 1 o'clock, I secured about 10-15% of my contracts just to take some risk off. And we kept rejecting. We kept riding that 8 EMA down. Ended up breaking through this 383.12 level and our other overlapping fib 382.60 to 38.2 retracement, and we entered the gap to the downside. Once we entered this gap, right around, I believe it was right around here, right before we entered that gap, I did take another quarter off for around 100%. It might have been a little bit more, right around 100%, but the idea behind that is, usually when we enter a gap, sometimes we find some support. In this case, that did happen. We didn't completely flush through to the downside and fill the gap yesterday. So what I wanted to do is, I didn't want to miss out on that opportunity because most gaps, I don't know what the percentage is, but if I'm not mistaken, I think it's like 90% of gaps end up getting filled. So was anticipating that gap fill. I ended up trimming out enough to where I was risk-free and able to swing another quarter into the next day. So we closed around 150% at 415 right here. We closed at about 150 in after hours yesterday. And then today we opened up and filled that gap perfectly to the downside. Right around here, the puts ran 250%. I trimmed, or it was either here or here, for 200%. And I was basically out of the trade completely at that time. Maybe had a couple runners, but something to point out at the bottom of this gap right here. This is where we found support, and I think as we speak, we may be testing it again. This is a live time. Yeah. So as you can see, right, today we're trading in this range, this gap fill range, finding a ton of support off of this 378.43 level. The gap fill was 378.48, 5 cents off, finding massive support. So I haven't really taken a trade today, and I don't think I will until we have a break of this range to either the upside or the downside. And so another example of this exact same strategy that I used yesterday for that the SPY 380 puts happened right here a few months ago, back in May 18th, so about a month and a half ago. I literally took the exact same, it was the exact same idea, the exact same setup. Basically, strong trend day, right? We opened up on a gap down on the 18th of May, had a strong trend day to the downside. I believe I was in puts, might have exited them or gotten stopped out runners at the beginning of the day, and then I just basically looked for another test of the 21 EMA on such a strong trend day, looking for a rejection. So on the 18th, I added SPY puts right here. I literally rode them into the close using that, once again, that momentum-based strategy. I think they went about 300, 400%, alerted live in Kane for all the members. So this is, when we have strong trend days, lots of momentum to either the upside or the downside, I look to play this strategy. It's the 8 and the 21 EMA, looking for a break to the upside. If it's puts, I'm looking for a break of the 8 to the 21 and adding puts off the rejection of the 21 to the upside. It's the exact same thing. I'm looking for a break to the downside of the 8, finding some consolidation support and a bounce off the 21 for more upside on the call strategy. This is, when I use the 8 and 21, I find them way more useful on strong trend days, right? To navigate a trend, navigate a trade during a trend day. On choppy days, they're not as useful. For example, the very next day, you can see it doesn't tell you much right here. So then I'll, put more of a focus on supply and demand zones, trend line breaks and whatnot. Level breaks, fibs. So that's going to do it for today's video. Next video, I'm going to potentially talk about supply and demand zones, as well as the mRNA swing that we took yesterday off of the 149 level, 148 to 152 supply zone. July 15th, 130 puts is what we're targeting. We're up, we woke up today about up 50, 55% with 2.5 weeks out. So I'm going to make that video next. Hope you guys have a great day. Hope you enjoyed this video. See you soon.